Shri Gurubhyo Namaha. Welcome to our online teaching academy, Ekalaiva. Class 11, Accountancy. Today we are going to see journal entries for adjustment. Okay. Sum number 10 in the exercise. Past journal entries for the following adjustments on 31st March 2021. So the name of the enterprise is not given, but still we'll write in the books of journal. Write the column heads, date, particulars, ledger folio, debit amount, and credit amount. Now, first transaction, interest due but not received, rupees 10,000. We are supposed to receive this interest, but still we have not received it. Okay, so these entries are passed on 2021 March 31st. Okay, yes. So this interest due is actually an asset because we are yet to receive the interest. So this is an asset. Asset increase has to be debited. So accrued interest, debit, to the concerned interest account. Okay. And the amount is rupees 10,000. We'll mention in the narration that being interest due but not received. Okay. Next is on the same day, salaries due to staff, rupees 50,000. So here we have some expense which is not yet paid. So this is called as outstanding expense which has liability as its nature. Okay. So salaries account, debit to outstanding salaries account. Amount is rupees 50,000. And in the narration we have to mention being salaries due to staff. Okay, next one. Out of the rent paid this year, rupees 5,000 is for the next year. So when we pay anything in advance, when we pay any expense in advance, that is considered as an asset for us. Okay, so we have prepaid our rent. So how much ever is the amount we have prepaid, that should be considered as an asset and it has to be debited. So prepaid rent account debit to the respective expense account, rent account. Okay, rupees 5,000. Being rent paid in advance. Right. Now we'll see the next transaction. Provide 10% depreciation on furniture costing rupees 1 lakh. So here we are supposed to provide depreciation for our furniture, the value of which is rupees 1 lakh. So 10% on 1 lakh. Okay, so it is 10,000. Depreciation is a non-cash expense. Okay, so we have to debit. Expense increase has to be debited, so depreciation account is also debited. Depreciation account debit to whichever asset we are depreciating, the respective asset has to be credited. The value of it is decreasing, isn't it? So we have to credit it to furniture. Here we are depreciating furniture, so the respective furniture account is credited. Amount is 10,000. Being furniture depreciated at 10%. Okay. Next is goods used in making furniture whose sales price is rupees 5,000 but the actual cost is rupees 4,000. Okay. So we have used our own goods to make furniture. Okay, so here the asset is increasing, the furniture asset is increasing, so debit furniture account to, we are using goods for this, so credit purchases account. Okay, so furniture account debit to purchases account and mention the cost price of it, 4,000, because we are not selling it, we are just using it for making furniture for our own enterprise, so we have to consider only the cost price. Being goods costing rupees 4,000 used in making furniture. Okay, next. Received commission of rupees 20,000 by check, half of which is in advance. Okay, so we have actually received a commission of rupees 20,000 by check and half of this is an advance. Okay, so first make entry for the commission received. Okay, total commission received. So we have received a check, so debit bank account to commission received account. And how much is the commission we have received? 20,000. Okay, being commission received. Being commission received. Now, out of this 20,000, half of this, that is 10,000, is commission received in advance. Anything which is received in advance is a liability, so we have to credit that item. Okay, so commission received debit to commission received in advance. Okay, commission received in advance. How much it is? Half of this, so 10,000. Okay, being commission received in advance. Now, next one. Allow interest on capital rupees 8,000. Interest on capital is the interest which is paid by the business to the proprietor. Okay, so it is an expense to the business, so we have to debit this interest on capital account. So interest on capital account debit to the capital account. because unless and until the proprietor is going to withdraw money from the business, it's going to be only in capital account. So we are transferring it to capital account. Okay, and the amount is 8,000 rupees. And in narration we'll mention being interest on capital allowed, right? Next is charge interest on drawings rupees 1,500. Interest on drawing is the interest which is paid by the proprietor to the business. So here it is a revenue. So debit the capital account. We are going to deduct it from the capital account. Okay. So debit the capital account and credit the interest on drawings. Okay, so interest on drawings account amount is rupees 1,500, being interest on drawings charged. Okay, so today we have seen how to pass adjustment entries, children. Please subscribe to our channel to get the latest updates on the online lessons. Thank you.